Build your dreams, live rich, and leave rich.
So many people think that building wealth in the stock market is all about watching those blinking red and green lights, trying to get lucky. But let me tell you something, that is not investing. That is pure gambling. Real wealth, the kind that lasts for generations, it's built completely differently. It's built by owning a piece of an actual, real business. So today, forget trading stocks. We're going to learn how to own companies. So look at this. On the left, that's the gambler's view. It's just a crazy jumble of numbers, right? Red, green, up, down. It's pure chaos. It's designed to confuse you. But now, look at the right. That's the owner's view. It's not a mess of numbers. It's a clear, simple blueprint. You see, the stock price is just noise. The real story, the value, is in the business itself.
And that's my promise to you today. I'm going to hand you the very tool, the X-ray glasses, if you will, that the smartest investors in the world use. With these, you're going to learn how to look right through that noisy stock price and see the real story. You'll see the company's actual beating heart, its DNA.
Now you might think this is going to be complicated, full of formulas and jargon. Nope. Forget all that. All you need is a little bit of common sense. And we're going to find that common sense in a place we all know, a place we all love, our very own neighborhood mithai shop.
Okay, so let's play a little game. Imagine someone comes to you and says, "Hey, I want to sell you my mithai shop. It's always packed with customers. The price is 1 crore rupees." What do? Do you just look at the long queue and say, "Sure, here's the money"? No way, right? Of course not. You'd be crazy to do that.
You'd immediately start asking some real questions, wouldn't you? Simple, common sense questions. Like, okay, how much did you actually sell last year? What are your costs? Who do you owe money to? Is there any actual cash in the register? Well, guess what? That's it. That's fundamental analysis. It's nothing more than asking these exact same questions, but to giant companies like Tata Motors or Reliance before you even think about buying a single share.
So where do we find the answers to these questions? The first document we're going to look at is called the Profit and Loss Statement, or the P&L. Now, the easiest way to think about this is like a video recording. It's not a snapshot. It's the full movie of the business's performance over an entire year.
And it's really, really simple when you break it down. Step 1, you have the top line. That's just the total sales, every single rupee the shop collected from selling all those sweets. Then, step 2, you subtract all the costs, the money you spent on milk, sugar, rent, paying your staff, everything. And finally, step 3, what's left over at the very bottom? That's your bottom line. That's the net profit. And let me be very clear, this is the number that truly matters.
Because you gotta understand this, and it's so important. A shop can have huge sales, right? Lakhs and lakhs of rupees coming in. But if their expenses are just as high, guess what the owner takes home? Nothing. Zero. That's why we say high sales can be for vanity. Profit is sanity. Never forget that.
Okay, on to our second tool. So if the P&L was the video recording of the whole year, our next document, the balance sheet, is more like a single photograph. It's a snapshot. It tells you the financial health of the business on one specific day, usually the last day of the financial year, March 31st.
And this photo has 2 parts, like a tug of war. On one side, you have assets. These are all the things the business owns that have value. You know, the ovens, the counters, the delivery scooter, and of course, the cash in the bank. Then, on the other side of the rope, you have liabilities. This is everything the business owes to other people. The loan you took for the ovens, the bill you haven't paid the milkman yet, any credit card debt, all of that. And understanding this difference is absolutely crucial. As this powerful quote from the Legacy Diary says, Ravi's luxury SUV on EMI was a liability that drained his income. Seema's shares were an asset that added to hers. It's that simple. One takes money out of your pocket, the other puts money in.
So, what's the real, true value of our little mithai shop? Well, the formula is surprisingly simple. You just take everything the business owns, all its assets, and you subtract everything it owes, all its liabilities. Whatever is left over, that's called shareholders' equity. That's the real net worth. That's what the owners truly own.
All right, now we come to our third and honestly most critical document. If the P&L is the story and the balance sheet is the snapshot, then the cash flow statement is like the oxygen monitor in a hospital. And believe me, this is where you often find the most shocking hidden truths about a company. Because here's a massive, dangerous trap that so many new investors fall into. They think that profit is the same thing as cash. Let me say it again. It is not. Profit on paper means nothing if it isn't backed by actual, physical cash sitting in a bank account.
Let me show you how a business that looks profitable can actually go bankrupt. It's terrifying. So in January, our mithai shop makes a huge sale for a wedding, 50,000 rupees. The owner sells it on credit, on Udar. On the P&L statement, it looks amazing, a huge profit. But then February comes. He has to pay 20,000 in rent and salaries. Then March comes, another 20,000. All this time, that 50,000 from the wedding sale, it hasn't actually arrived. So the business is profitable on paper, but it has no cash. It's bankrupt.
And that right there is why cash flow is the king. It's everything. A business can survive for a little while without making a profit, but it can't survive a single day without cash. Cash is the oxygen. And when a business runs out of oxygen, it doesn't matter how profitable it looks on paper. It dies.
Okay, so now you have your X-ray glasses. You have the 3 essential tools. Let's put it all together and see how a real investor uses them to get that complete 360-degree picture before risking even one single rupee. Think of it as the holy trinity of investing. It's a simple 3-question checklist. First, you look at the P&L statement to answer, does this company actually have a profitable business model? Second, you check the balance sheet. Is this company secretly drowning in a massive ocean of debt? And third, the ultimate reality check, the cash flow statement. Is this company faking its success with paper profits, or is there real cash coming in?
All right, let's lock in these key terms. Quick, rapid fire. Ready? Revenue. That's the total money a business collects from sales, the top line.
Next, net profit. This is the real money left for the owner after every single bill has been paid, the bottom line. An asset. Anything the business owns that has value and can put money in its pocket. And finally, a liability. That's any debt the business owes that takes money out of its pocket. Simple. So, I'm going to leave you with this one final question to think about. From this day forward, what are you going to be? Are you going to be a gambler, blindly throwing your money at those blinking numbers on a screen, or are you going to be an owner, using these X-ray glasses to find and buy a piece of a real, solid business? Ultimately, the choice is yours, gambler or owner. Keep chasing the flashing lights or start reading the very DNA of a business. Subscribe for more explainers just like this one that will help you build real, lasting wealth.